from over there. Today we're going to break down each of those different classifications of adjusting journal entries. We're going to show the actual journal entry and some examples of what we would do. What you're going to notice is a lot of these are going to start to look pretty much the same. Okay? We're going to be using the same accounts for each type for the most part, and only the amounts are going to be different. Okay, so as a reminder, when we have accrued revenue, it's revenue that we have earned, but we have not been paid yet. So we've done the work for it, we just haven't received any money yet. An accrued expense is an expense that we have incurred, so we owe some money, but we haven't paid that money yet. And a lot of time that is going to be with wages, okay? Employee wages. With deferrals, so unearned revenue, we've received cash, but we haven't done anything to actually earn that cash. The adjusting journal entry for that is what the journal entry that we do when the revenue has actually been earned, okay? So it's not when we're getting the cash, that's the initial entry. The adjustment is when the revenue has been earned. And then our prepaid expense, we paid cash for a future expense at some point, and now we're showing what of that expense has been used up for the adjustment, okay? So we're gonna practice classifying these different types of transactions. On your homework that you're gonna have, which will open at like 4:30 today, or some point today, when I get a chance to go in and open it. You're going to have several problems like this, where you're telling Cengage if something is a prepaid expense, unearned revenue, accrued expense, or accrued revenue. And it's important to figure that out because it helps you with the journal entry, right? If you know that something is a prepaid expense, you can go to the prepaid expense section and kind of get an idea of what the journal entry should look like, okay? So if we have wages that are owed, but we have not yet paid them. Accrued revenue, you are correct. So this is going to be accrued revenue. Oh, why did I do that? Okay. Supplies on hand. Is that going to be prepaid expense, unearned revenue, accrued expense, or an accrued revenue? Not accrued expense.
No, prepaid.
Oh, prepaid. Yep. Sorry, I didn't hear you. You got it. Prepaid expense. We messed something up on the first one. That's not accrued revenue, that's accrued expense. And you probably said expense and I just wrote it wrong. All right, so the first one is accrued expense. Accrued expense, prepaid expense. All right. Fees that we have received, but we have not earned them yet. Unearned revenue. And then our last one, fees that we have earned, but we have not yet received. Accrued revenue. Okay. So now we're going to go through the different kind of journal entries for each of these and what some of these problems might look like on your homework, okay? So assume that Net Solutions signed an agreement with Dankner Co. on December 15th to provide services at a rate of $20 an hour. On December 31st, they'd provided 25 hours of service, and they're going to send them a bill later on. Okay, so this isn't us actually sending the bill yet, but we need to show this revenue on our financial statements. So December 31st. Does anyone want to take a guess at what we're going to debit? Someone owes us some money, they're going to pay us later.
Annual revenue?
Nope. Fees earned is what we're going to credit. We're going to debit accounts receivable. Okay. Can't spell today. There we go. And we'll come back and get that amount for that in just a second. But fees earned is going to be what we credit. So this is going to show that someone owes us some money, and it's also going to show our revenue on it. We're going to put a description on this. I'm pretty sure when you do this on Cengage, you don't have to put a description on any of these. But we're going to just put adjusting entry. And we're going to use this description section for the math portion here. So $20 an hour times 25 hours of service. How much are we going to have to pay? Or they're going to have to pay us, sorry. 500 bucks. All right. Most of the journal entries for accrued revenues are going to look like this, okay? Except the amounts that you have will be different. But it'll be a debit to accounts receivable and a credit to fees earned, okay? We'll have another example of that in just a second, just to make sure we got it. But we also need to make sure we know what happens if we don't do these journal entries, okay? So if we don't do that journal entry that we just did, our revenues would be understated by $500. So we'd show $500 less revenue and $500 less in net income. Our assets would also be understated by $500, and so would our stockholders' equity. The reason this is important, first, net income is what the IRS uses to figure out what? What does the IRS do? Taxes. Now, while $500 isn't that big of a deal, okay, it's probably pretty negligible when it comes to figuring out how much more tax we would owe. Let's pretend that this is like all the other financial statements we've looked at, and this is in millions. That'd be like $500 million. That's a lot of money that we're not paying to the IRS in taxes, okay? And if you don't pay the IRS the money they're supposed to get, they get pretty mad. And you have to pay fines, and it's just a bad thing, right? Stockholders' equity and our assets being understated is going to affect how our ratios look, how our shareholders look at us, how our stakeholders look at us. So this is not something we want to happen. We want to make sure we're doing these journal entries at the end of our accounting cycle. All right. One more example of this. At the end of the current year, we have $13,680 of fees that have been earned but have not been billed to clients. So we're going to do the journal entry, the adjusting journal entry to record our accrued fees. Okay. All right. December 31st. What account are we going to debit? That's our credit. Accounts receivable. So we're doing the same thing we did right above. And here it gives us the amount, so we don't have to figure that amount out. It's $13,680. And Ryan told it, already got our fees earned part for us. Our credit is for fees earned. So when you're doing your homework assignment, pay attention to the wording on these. If it's worded similarly, it's probably this kind of problem, okay? Good. All right. We're going to get into, oh, you know what? That's labeled wrong. On this number 9, I want you guys to cross out the word wages and write expenses there. I wrote the wrong thing. We're going to talk about accrued expenses. Most of the time, this is going to be accrued wages. And so what that means is the day that we pay our employees and the day that our accounting cycles end, when we have to do all these adjusting entries, are most likely never going to be the same day. That's just how it works. But we still have to show the money our employees have earned on those days in that month that they haven't been paid for yet. So I lost my mouse, there it is. Up on our screen, we have a company that pays its employees every 2 weeks for what they've earned those previous 2 weeks. So 2nd through the 13th of December, they pay them on the 13th. 16th through the 27th, they pay them on the 27th. But December 30th through January 10th, it doesn't get paid until January 10th. Because these 2 days are part of the accounting cycle for the year before, we have to show the wages our employees are going to earn on those 2 days. Okay? We got some math we got to do. All right. Net Solutions pays its employees bi-weekly. That's what we just saw. It tells us what they do during December. We don't need that right now. As of December 31st, Net Solution owes $250 of wages to employees. So on those 2 days, on December 30th and 31st, their employees earn $250. Keep in mind, this is a really small company, so it's not that bad. All right, December 31st. The way that we're going to do this is we're going to debit wages expense for $250. And we're going to credit an account called wages payable for $250. What this does is shows in our expense account the wages our employees have earned. But because we're not actually paying them yet, we're crediting wages payable to show that we know we owe some money to them. Okay, it's a liability, just saying, yep, we know we owe money, we're going to pay it to them later. Okay. And then we don't have to put a description there. We know what it is. It's an adjusting entry if you want to put a description. The other side of this is we have to know what's going to happen when we actually pay them. Okay. So on January 10th, when we get there and it's time to actually pay them, and we have to record all the rest of this into wages expense, we already have $250 in there. Okay. And we have this weird $250 in wages payable, and we want that gone. Okay, we don't want to show that we still owe the money because we're going to pay them. So what we're going to do on January 10th, we are going to debit wages payable for $250. Because again, if we credit it, the amount increases. If we debit it, the amount decreases. And then the rest of that $1,275 are going to get paid. We're going to debit to wages expense, which should be, let's see, $1,025, I think. Okay. So we have the debit side done. Because we're actually paying them now, what are we going to credit? Paying them money. What is it going to be? Cash. Yeah, say it loud enough I can hear you. Sorry. $1,275. Okay. So up here, this first one we did is what we do for the adjusting journal entry. Down here, this is what we do when we actually pay them, our employees, the money we owe them.
I don't understand why our both counts in the debit part.
Yeah. Okay. So the first one, let me get my mouse here. So on this first one, we have to show this expense because it's part of the previous year. Okay, so it's part of that whole. So this was the end of 2021. That $250 is part of that. But we haven't actually paid him yet, so we can't say it's cash because that would make our cash messed up. But when we actually pay them, we got to do something with this payable amount that we have. So instead of reversing that journal entry like it never happened later on, we just debit wages payable now. And the rest of that amount is going to go in wages expense. Most of what we're going to do in this class will be this one up here. Okay, but it's a good idea. It's good to know what happens or how that's all happening down there. Ah.
Okay, thanks.
Yep. All right. So if we don't do this, so before when we didn't do our adjusting entry, we were going to owe the IRS some more money. And this one, we have expenses understated by $250, which means our net income is overstated. We're showing too much net income. So the IRS is going to tax us more. And if later on, after we paid the IRS, we figure this out, the IRS, once they get the money, they like to keep it, right? They don't really want to give it back to the business after the business has paid the taxes. Especially if, again, we're putting this in millions. That'd be a lot of money right there. Be a big mistake that we'd have to fix. So we want to make sure we're doing this correctly. And then, of course, on our balance sheet, it affects what happens with our stakeholders and our stockholders and how they view our company. We are going to do one more example of the first part of this that we did, not the second part, just that first part, where we have to figure out the amount. Okay, so we're adding a step to this now. So we pay weekly salaries of $12,500 on Friday for a 5-day week. And do the journal entry, the adjusting entry for the end of the accounting period, if the accounting period ended on Thursday. So our employees get paid every Friday. This week, our accounting period ends on Thursday, and we have to show those first few days on our financial statements. We're going to do almost exactly the same thing we did up on part 10. Okay. If you'd put wages expense and wages payable for this, it would be totally fine. But it specifically says in here that these are salaries. So instead of wages expense and wages payable, we're going to use salaries expense. And salaries payable. And we're going to use this bottom part to show how we figure out what the amount for this is supposed to be. Okay? I'm going to walk you guys through my thought process when I see this. They pay weekly salaries of $12,500, so $12,500 on Friday for a 5-day week. So we're going to take our $12,500 and divide it by 5. Because the first thing we want to do is get the amount that they're paying every day. Okay? So every day they're paying $2,500. Their week ends on Friday. So we're going to do the journal entry, assuming the accounting period ended on Thursday. So we have to show that these employees would have been paid for Monday, Tuesday, Wednesday, and Thursday. Okay? So 2,500 times 4. So our journal entry on this one is going to be for $10,000. If it was only Wednesday, if the accounting period ended Wednesday, instead of 4, we would multiply by 3. Okay? For the most part, you can assume it's going to be a 5-day week. So whatever the big number is, divided by 5, and that they're going to pay their employees usually on Friday, unless it specifically tells you otherwise. Okay? All right. And that is our accrued expenses. We got 2 more we're going to do. We're going to do unearned revenue and then our prepaid expenses. So remember, with unearned revenue, we are showing what happens at the end of the month, okay? So this isn't when we were paid the money. When we were paid the money, we would have debited cash, credited an unearned revenue account. This is what happens at the end of the month. Oh, that's not what's supposed to happen. There we go. All right, December 31st, we have an unadjusted trial balance for Net Solutions that shows unearned rent of $360. This balance is the receipt of 3 months rent that we were paid on December 1st. So we rent out a space. Someone paid us for 3 months on December 1st, $360. At the end of December, we have to show how much rent, how much of that $360 we have actually earned now, okay? Until we've earned the money, we can't show it as revenue. So, December 31st, we're going to debit unearned rent. If this was just for sales, it would be unearned fees, or you could just put unearned revenue, and that would be fine. And we'll come back and get the amount in a second. And because we want to show that now we've earned this money, we're going to credit our revenue account. So here would be rent revenue. If it was just for a product, it would be, or a service, it would be fees earned that we would put there. We have an adjusting entry for our amount. So we have a balance, $360. How many months did they pay us for?
3.
3. $360 divided by 3, 120. So our journal entry is going to be $120. Okay. When we do that journal entry, because we're debiting unearned rent, the amount in that account is going to decrease. So it's going to show $240 left, and that's for January and February. Okay, at the end of January, we do the same. We would literally do the same exact journal entry we just did, same amount, and then that account would only show that final amount for February in there. Okay. All right. Looking again at what happens if we don't do that. Net income's understated, revenues are understated, liabilities and stockholders' equity are affected. Lots of bad things. We don't want that.
Did you go off for a moment?
Yeah. So on part C, we're gonna do this as if this was for fees earned. If we had done some work for someone and they had already paid us. Now, I'm gonna give you an opinion about this. So in this particular problem, it tells us what we started with at the beginning of the year or during the year, right? This is our balance. They paid us $44,900. And then it tells us the amount that we should have as the balance of that account later on. Now, there is no way to get this number without knowing what the number we were going to have for the journal entry. Okay? The textbook authors are just trying to make you do extra math that in the real world you wouldn't have to do. All right? So, makes me angry and I don't like it. I'm going to complain about it probably for the next 2 or 3 minutes. But the journal entry we're going to do. So up above, we had debited unearned rent, but here we're dealing with fees. So what account are we going to debit here? Unearned fees. You can put unearned revenue. Unearned fees. I'm going to put revenue in parentheses so you know you can do that. Okay, and we'll come back and do the amount in just a second. The credit is going to be for fees earned. Okay. And the way that we would find this amount in this particular problem, before we adjusted anything, we had $44,900. And our balance in unearned fees should be $12,300. So if the problem tells you that our balance should be in the what our balance should be in the unearned fees account, you're going to take what we start with and subtract. If it tells you how much work we've done, you just use that actual number. Okay. So the amount we're going to end up here is $32,600. Okay. Don't let the math part of it trip you up. So our unearned fees ones will look like this. Our unearned rent ones will look like what we did up in part A. Okay. Again, when you're doing the homework, go through and read them. If they sound like this one, it's probably going to be similar to this one. All right. Prepaid expenses has two different ones we're going to do. We're going to do a journal entry that deals with supplies and one that deals with insurance. Okay. We've kind of done the supplies one before. We're going to go a little more into it this time. So December 31st, we have an unadjusted trial balance that shows we have $2,000 of supplies. Some of these supplies were used during December and some are still on hand or not used. Assuming that on December 31st, the amount of supplies on hand is $760. We have to figure out the amount that we're going to move from our supplies account to our supplies expense account. So the way that we do that, we know what we have available. So we know the supplies available. Wow, I spelled that so bad. Man. Oh my gosh, I can't spell today. I need to look at what I'm actually typing. During December, this is our balance, or the balance of the account. And our balance for our account was $2,000. Okay, balance in the supplies account, $2,000. We also know the supplies, oh my gosh, I cannot spell today. The supplies on hand on December 31st. This is what we have left over. Okay. We're going to take this amount and we're going to subtract it. So that's $760. We're going to subtract. And that's going to give us the supplies that we've used, or the amount of the adjustment. So 2,000 minus 760, it was 1,240. So I'm going to give you guys a little formula here underneath that to help with any of the prepaid expense problems, because you're going to run into this a lot. Whatever you start out with, so what you start with, or the balance, plus additions or purchases, minus what we have left over or the ending balance equals the adjustment. Oh, it went to 2 lines. Okay. There we go. So whatever we start with, we're going to add in anything we purchase. We're going to subtract anything that's in our ending balance, and that's going to give us our amount to adjust. So we've done all that. We haven't even done the journal entry yet. So our journal entry on December 31st, we have to debit our expense account. So we're going to debit supplies expense for $1,240. We're going to credit supplies because we want the balance in that supplies account to go down. Okay. A whole extra page on mine. That was weird. Okay. The other kind of prepaid expense we could have would be prepaid insurance or prepaid rent. If we are buying insurance in advance or if we're paying for rent in advance. It's going to be pretty similar to what we just did. Okay, so we have an unadjusted trial balance for net solutions that shows a balance in our prepaid insurance account for $2,400. So this shows our payment for our insurance for 12 months. At the end of December, the insurance expense account is increased or debited, and the prepaid insurance account is decreased or credited by $200. So for the next 12 months, we paid $2,400 bucks. Do 2,400 divided by 12. Each month, we're going to have used up $200 of our insurance. So our journal entry. On December 31st, we're going to have an insurance expense account. I'm going to get $200. And the asset account for this is going to be prepaid insurance. And just so you don't forget how we got that amount, it's 2,400 divided by 12. If we had only paid for 6 months of insurance, we'd do 2,400 divided by 6, or 3 months, 2,400 divided by 3, okay? So make sure you read the problem carefully. We have some more info here about what happens if we don't do this. So if we don't do the adjustment for supplies and insurance, expenses are understated, which overstates net income, which means we're paying more to the IRS than we have to eventually. Overstating net income also overstates stockholders' equity, and our assets get overstated, which throws off all the ratios we do to figure out what our stock price should be. Throws off ratios if we're trying to get a loan for things we might use to try to get a loan. Does a lot of bad stuff. Okay. So the first error indicates the effect on understated expenses on assets. Second one, overstated net income and stockholders' equity. We got one more problem we're going to do. All right. We have prepaid insurance. The prepaid insurance account had a beginning balance of $2,400, was debited for $3,600 of premiums that we paid during the year. We need to do the journal entry if the unexpired insurance related to the future is $3,250. So the first thing we're going to do in this one is find the amount. Okay. I'm going to go back up here and I'm going to copy the formula we created. Put it in here. Okay. So what was our beginning balance? 2,400. So in here it says that we debited for premiums that we paid during the year. So we paid $3,600 more. So we need to add that in there. And then what was our balance at the end of the period? Started with 2,400. We paid 3,600. What is it saying there that we have left at the end? What's our unexpired insurance amount? 3,250. So that's our leftover, our ending balance. So 2,400 plus 3,600 minus 3,250 should give us 2,750, I think. All right. We're going to do the same journal entry we just did, except with this amount. So what do I need to debit? What did we debit in part A of this one? Insurance expense. For 2,750. What did we credit in part A? Prepaid insurance. For that same amount. I spelled insurance wrong. Okay. So again, when you're reading through the problems, make sure you're looking for things that look similar to what we've talked about today in class. Okay, because a lot of them are going to be the same. A couple things we need to talk about before everyone runs away. Okay. A week from today, we will not have class for my classes. I have to get my root canal finished next Tuesday afternoon. And so I'm not going to be able to talk and I'm going to be in lots of pain. So I might be here that day, but the likelihood of me being able to speak and hold class is pretty slim. So we're just not going to have class. Next Wednesday. So a week from today. Yep. Yeah.
See you Friday?
Yes. No, not on Friday. Next Wednesday. Week from today. Oh, I'm scrolling on my screen. Sorry. Friday, we will have class. On Friday, we will finish going through this handout. Okay. Which means on Monday, we will start going over your homework. And hopefully by next Friday, we're either finishing going over your homework or we're doing the in-class activity, okay? So your homework for this chapter won't be due until next Friday. So not this week, but next week. Your quiz won't be due until next Wednesday. Both of those will get open later today at some point. That's it. I'll see you all on Friday. Unless you have me for more than one class.
So the quiz maybe is the 20th?
The quiz will be due on the 14th. The homework will be due on the 16th.
The test and
Oh, the actual test?
the middle exam.
The midterm will be sometime this week. It'll probably be the 21st or that Wednesday. It depends on how far we get next week.
Thank you so much.
Yep. The midterm will either be the 21st or the 23rd. the first 3 chapters. So we'll go over that week what's going to be on the midterm. Yeah. Don't freak out about it yet. It's okay.